Payroll systems should be designed to pay employees accurately and in a timely manner, meet regulatory requirements, provide useful data to management. Although payroll systems differ among companies, the major elements of most payroll systems are a payroll register, an employee's earning record, and payroll checks. The payroll register is a multi-column report used for summarizing the data for each payroll period. The process of debiting the various expense accounts associated with recording payroll is called payroll distribution. Each employee is listed in the register, along with the total hours worked. Gross earnings of regular and overtime pay are entered into the register. McGrath's earnings are highlighted here in pink. The last two columns of the payroll register are used to distribute the total earnings to one of the two salary expense accounts, sales salaries or office salaries. The payroll of $13,902 is distributed as $11,122 to sales salary expense and $2,780 to office salaries expense. The payroll register information is used to prepare the payroll journal entry for the week ended December 27. The deduction for Social Security tax payable and Medicare tax payable are the employee's contribution for FICA taxes. The credit to salaries payable is the net pay or the take-home pay for employees. Social Security tax equals $834.12, and Medicare tax equals $208.53. These match the amounts withheld from employees' checks. In this example, the amount of payroll subject to state and federal unemployment is $2,710. State unemployment is computed as $146.34, $2,710 times 5.4%. Federal unemployment is computed as $21.68, $2,710 times 0.8%. The total amount of employer payroll tax expense is $1,210.67. McDermott records a journal entry debiting payroll tax expense and crediting each of the tax liability accounts using the data computed on the previous slide. A detailed payroll record is maintained for each employee. This record is called an employee's earnings record. This slide illustrates the employee's earning record for John McGrath. It lists the wages earned and deductions for McGrath for each pay period during the calendar year. This slide is a continuation of the payroll record for McGrath. The official annual report of an individual's earnings is reported on a wage and tax statement, also known as the W-2. This form is provided annually by an employer to each employee as well as to the IRS and to the Social Security Administration. At the end of each pay period, payroll checks are prepared. Each check includes a detachable statement showing the details of how the net pay was computed. This slide illustrates the payroll check to John McGrath. It consists of the actual check and a detachable statement that summarizes McGrath's earnings and deductions for the week ending 12/27/11. It also lists a summary of year-to-date earnings and deductions for McGrath. The inputs into the system are the constant data, such as pay rate and tax rates. Other inputs include current period variables, the hours worked by each employee, and updated variables, the cumulative earning and taxes withheld. These inputs are used to process the payroll register. The payroll register is used to produce various outputs, including financial statements, payroll checks, and quarterly and annual wage and tax reports. Many of the cash payment controls described in Chapter 8, Sarbanes-Oxley, internal controls, and cash, apply to payrolls. Safeguarding assets, properly authorized transactions, and reconciliations are just some of the objectives of a strong internal control system for payroll.